Hi, I'm Steve Breen, owner and founder of Prosperion Financial Advisors. Welcome to this edition of Prosperion, a commentary that's designed to help our clients be better investors. Well, as we look back at 2015, there's one word that seems to come to mind: volatility. Though the swings felt dramatic, the S&P 500 actually had less volatility than what I would call a typical year. The peak to trough swings during the year were separated by around 12.4%. Compare that to an average year since 1975 of 14% peak to trough. It was less. So why did a rather average year of 2015 feel like a roller coaster? Well, upon tripling in the last 6 years since the financial crisis of 2009, the stock market, I would say, rested. But the media needs to tell a story. So they focused on three areas: China, interest rates, and oil. And I call this their drama-taries. Let's start with the slowing of the Chinese economy. Frankly, it's normal for an economy to eventually slow down. The move from an emerging or agrarian production-based economy to a consumer economy is inevitable. It's part of maturity. Think about these facts. The United States exports to China less than 1% of our total exports. Not a big number. But the U.S. is a major importer of goods and services from China. And when the dollar is strong, like it has been recently, we're getting more bang for our buck. I think this is a boom for the American consumer. And I think the bigger concern is how we trust the Chinese government. How much? They're a communist country. They're controlled. It's a controlled economy. It's a controlled currency and controlled communications. How much should we really believe? Fact versus fiction is really concerning me more than a marginally slowing economy. The next drama-tary is interest rates. And yes, the Federal Reserve finally increased interest rates in December by 0.25%. So you went from earning nothing on your money to now virtually nothing on your money. In my opinion, that 0.25% will have no meaningful impact on the availability of money or credit. Yet if we believe the media and their story, that increase was going to spell the end of the American economy. Pretty dramatic. And last, in the drama-tary area, is oil, which seems to be in a limbo championship, playing how low can we go? That's going to impact earnings on oil companies and related services. But I think it's one of the greatest middle-class tax cuts in American history. The decline of energy price is a windfall for consumers, enabling you to spend less on gasoline and more on other things. I think the lower energy costs are a net positive to Americans as well as the global economy. The price of oil has very little to do with demand, but rather it's a supply issue thanks to innovation, the implementation of technology in the energy industry, 3D seismic, fracking, directional drilling. The reality, we're getting more energy out of the wells faster, easier, cheaper, and quicker. It is a supply problem that's pressing oil prices down. So, in summary, 2015 was the year of apocalyptic journalism noise that was, well, about nothing. That drama-tary, I think, will continue in 2016, especially with the election. What's the best strategy for investors? Turn your TV off. Turn the noise down. Stick with your investment plan. Guard your temperament. Your portfolio should not play like a game of whack-a-mole. Stay the course. Invest in quality, diversify, and avoid emotional reactions. Call us if you have concerns or uncertainty. We are here to help you. Thank you for your time today. Thank you for being a client of Prosperion Financial Advisors. I'm Steve Breen.